Yeah, sure. So our base case is that Trump will impose some new US tariffs on EU goods this year. The EU seems to have escaped his opening salvo. He talked about Canada, Mexico, and China initially in his first comments. But we know that the US trade deficit is a metric that he cares about, and the US does have quite a big deficit with the EU. So we think it's a matter of time. We think that the US will impose new tariffs on the EU. Regardless of that, uncertainty is quite elevated around tariffs. Trump is, inherently unpredictable. There's always that risk that tariffs could be slapped on goods at short notice, and that is going to weigh on confidence in the EU economy. So that's a key reason for our forecast being slightly below consensus this year. For the ECB, does it matter? Possibly. I think over the short term, a rise in protectionism could actually be inflationary, right? So we would assume some retaliation from the EU that would push up prices. There might be a bit of euro weakening as well, which slightly further ahead would also put up inflation pressures. So it's tricky for the ECB to navigate these sorts of trade winds, I think. I think short term, the ECB wouldn't necessarily react immediately to the announcement, at least, of new US tariffs. Our base case is that these kind of back-to-back rate cuts that we've seen so far over the last couple of meetings, they will continue. The ECB is on course to get back towards neutral through the course of this year. We put neutral at 2%. That's the MUFG estimate. We think that's in line with the ECB's own thinking. So we see 4 rate cuts this year to bring the ECB deposit rate back to 2%.